Welcome to Insights. I'm Eric. Good day to all. It's morning here in North America, but I'm sure it's something everywhere else. And I know a lot of people are watching these videos around the globe, so I'm pretty sure it's afternoon somewhere and probably evening in other places. But it's another day after the grain markets had another interesting week. Not much has changed in terms of the evolution of the trade. We have a downturn in the daily, and that's one of the reasons why everyone's kind of getting upset with the grain market. But that downturn has not infected the weekly trends at all. They're still up. The price cycles, which are here, and the time cycles, which are here, are still statistically extended beyond their normal cycles, and that's a warning that the weekly trends are vulnerable and that the downtrends are still working through what we call cause building or consolidation, which is when the composite trend is no longer in agreement. So we have down daily, up weekly, and up monthly. Perhaps the correction will come in and deal with the weekly at some time, turn it down, and then flip it back up. But those are the perfect world, and we're not sure we're going to get that. As I've shown before in previous reviews, of the 80 some, a large portion of them, they will reset by now, but 5 or 6, 7 big ones that took place, they never broke, and they continued to go higher. So these 53, the lengths of these vary from 70 to 80 weeks, which it's not a lot of time, but it's enough that it could continue higher. The best bet would be a reset of the weekly and then the turn back up and we get triple alignment again. Now, why we're talking about grains here is largely because of energy, and we've had some private discussions, some emails, and other conversations, both on the internet and mostly outside. How does the energy look? Is it looking still favorable? And the short answer is it's not much has changed, and it's looking just as favorable it was last week in terms of the snapshot of which is DI, and then the trend, which is DI2. The three components of energy are WA, DI, and DI2, which are here, here, and here. And they're saying roughly the same thing. Now, the energy snapshot, which is the moment of energy build in from one week to the next, which is DI, they came down a little bit for corn and soybeans, but they shot up substantially from wheat, and we're going to take a look at that in a second in further detail. Wheat was minus 40 some and then shot up to 31. And this is affecting the grains DI, and the grains DI shot up to one of its highest readings that we've seen so far. So this is quite encouraging. Wheat needs to pull the DI2 up, so there could be more of an energy build here. These are pretty high numbers here, and these continue to go higher. So one of the comments that was done when before I laid out this review was, are we reading this right? Is the energy build? Is this the energy build? Yeah, this is the energy build. It doesn't always have to stay at 90. Soybeans was 90 last week, 78. The difference between 90 and 78 is pretty marginal. It's really the DI2 trend that we're most interested in. These continue to go higher, and I think we're going to have to take a look at those in closer detail. The evolution of the trade is a primary trend following trading discipline. It's either up or down, and the 3 time frames move in and out of alignment, so there's corrections within the monthly trend. But the monthly trend, or what we call the primary trend, has been up from 11 to 13 months and produced these types of returns since then. And those are gross returns. They don't account for fees and holding charges and everything else that comes associated in the investment world, taxes and others. So this is the gross return. These were higher. The reason they're coming down is because the daily's is turning down. But we're starting to know, and I don't want to focus too much on the daily, but we have the price cycle on the daily here, and these are down cycles, and here's the time cycle. They're starting to turn blue, which is a little bit of the early warning phase, that at 20 days, they're getting a little extended. They'll turn red, and then they'll get bolded red above too, and that's probably when the daily downturn will be due for a reversal. Hopefully at some point that will turn down these and reset these cycles. Let's turn back and shift some gears back into the energy builds, and let's take a look at those. Now, if you're a subscriber, you can click these links and you can pull up the charts, but I'm going to pull up some more of dynamic charts so I can interact with them. To do that, I have to go into a separate database and pull away from the matrix. As this loads up, we're going to look at the grains DI and the corn, soybeans, and wheat. So the first one that pops up is the grains DI. This is a composite for all the major grains, and it doesn't include oats and some of the. I mean, I would include that stuff, but oats has got a much smaller open interest. Although it's inside my database. I don't publish it because the data itself can be interrupted to the CFTC, which is not good for the computer. And then I have to go in and adjust the database. I have no idea why it does that, but there's numerous examples that it has. But this is the grains DI, and this encapsulates corn, soybeans, and wheat. And the first thing that should stand out, and this was addressed in the last video I did yesterday on an overview within the matrix, is the DI is now 59 and 24. And so it's DI2 is 24. 59 is the highest reading now. We've eclipsed this high and we eclipsed this high. This high right here is what turned the market. We're also higher than the DI2 of this time. So this energy build is growing with each passing day. So energy is a function of each one of these markets in there. So I don't want you to take too much heed on when we study the individual markets themselves. Let's go over to corn here and we can see the same thing. Corn's DI was a little bit higher last week, was in the around 70, but we ticked down. We've also ticked down, but that we're still above that. We're still above 60, and we're pulling DI2. See how high DI2 can go, this yellow time series. It can go above 60, so this build can get quite large. That's what we're hoping for, the longer this pulls down. And we're going to check out where those reversals lie as well. We're going to check out the reversals in terms of the corn ETN, which is really the continuous contract that we follow. The computer has to study continuous contracts. It cannot keep flipping from front month to front month. So it needs to study one continuous time series over a long period of time in order to establish the cycles and the price and time cycles, the volatility cycles, all the things we've talked about over the years. But we are looking at corn. It continues to build that energy build. Once DI2 gets above 60, this thing is really going to mature. The other thing that I would like to point out, and this is pretty universal, is WA is almost zero. It's 103, but that's a scalar for this chart. So it's actually 3. That's almost zero. Zero is the lowest you can get. That means nobody's participating in this. And as the price gets jammed down lower, no one's playing in it. No one's forced it. There's no force behind it. This is a lightweight consolidative type of move. If there was selling and the selling was going to pick up, you would see WA move this way upward, and it's just pinned to the bottom. So this is very reflective of consolidation. But again, it's consolidation within cost building, within the evolution of the trade, and we're waiting for the right setup. And this has to do with corn, it has to do with soybeans, and it has to do with wheat. We're going to move to soybeans and take a look, and you're going to see a common theme. Here's the soybeans DI. They look very similar. You have a DI is 78 now. DI2 is 53. It's a little bit more advanced. The one thing you'll know with soybeans is you didn't see quite the energy build that turned the market. The setup was a little bit different. So now what's going to happen is the invisible hand was long here. It didn't quite get to 40 on the DI, but it was a little light when the turn happened. So what I'm thinking is it's really going to jam it down as far as it can go and build this energy build so it can get in, because it missed heavy exposure. It got it in corn, it got it more so in wheat, but it missed it in soybeans. So I'm sure there's a real effort here to drive the price down in order for it to get back in. It is driving the price down, and again, it's showing the same characteristics as corn is. WA is almost zero. It's 2%, so it's slightly lower than corn. So there's no force to this decline. That doesn't mean the price can't continue to go down. It just means there's no force behind it. No one's jumping on board. It's what I always called, when I first developed a lot of this stuff, I was trading inside the precious metals market in the late 1990s and early 2000. The first thing that I noticed is the invisible hand likes to beat the grass to startle the snakes. And this is exactly what's probably is taking place here in soybeans. I mean, if this market turns and moves again, it's 100% confirmed. I've seen this before. They'll slam the market down, bearish news, but there is no force behind it. There's no real liquidity. No one wants to play here. It tells us that it's more likely an operation in order to meet an objective than the price actually falling for price you're trying to get a price discovery at a lower level with force. If you're going to do that, everybody's going to sell at once, and because they're going to try and get out, and they're going to try and achieve the lower price target. This is more of an operation probably to take out the weak hands. So really, soybeans looking the same as corn. And let's take one last look at wheat before we head and look at some of the reversals. Wheat had the energy build back over here when it turns, and clearly wheat setup is a little bit different. Then it tried to get it again here, a little higher DI2, but not quite. So wheat has a spike that took place here, and then it kicked the price up. Now we're at 31 and 21. It's coming back up. Wheat is probably a little bit left out, needs more energy. Maybe there's more downside as it also tries to beat the grass to startle the snakes. Maybe there's a down in here. You're going to try and push DI and DI2 much higher, but again, there's no force behind this. This is 15. This is not characteristic of a market that really wants to sell off. When a market's selling off and sliding down a ski slope, everybody's forcing that one. I mean, that there's downside because WA is above 80. It's almost 100%, and it's pinned there because everybody is opening contracts and expanding into the downside. We see none of that. There's the decline here, but there's no one participating. So these are similar themes across all grain markets, and it's really for corn, wheat, and soybeans, they look very similar. And that's one of the reasons why when you look at the grains DI, you focus on all those. You have rising energy, it's pulling up DI2. There's no one playing here, so as these markets correct, there's no force behind it. So let's head back to the matrix and we'll take a look at a few other concepts here. So the energy build looks about the same as it did last week. It's kind of hard because in soybeans it was 93, 94% last week. So the highest it can go is 100. This is a unitless measure. It measures flows from week to week, and then it measures the longer term flows that go back further than that. So this gives us a directional trend. These are a snapshot in time, like a balance sheet. We look at them at one point in time, except they're not quarter to quarter, they're week to week. And they continue to pull up the DIs. You can click on these links right here, and you can pull these charts from the cloud that we just showed, and you can see all these trends that are taking place. In terms of the price, this is what we're dealing with. I think this is what everyone understands. We're seeing consolidation. Maybe you want to draw on a few charts or lines to feel comfortable. That's what everyone likes. This is a downward action. And then you have another. You could do this for all of them, and I don't do a lot of drawing of arrows. This is a descending triangle. Oh, and then it failed. Oh, yeah, maybe it's not going to be a failure. There really is no precedent for pictures here in terms of what's taking place. What's taking place is the movement of the cycles. The reason why it's in consolidation is because it's trying to desperately deal with this, trying to reset this. But you also know that the invisible hand keeps stepping in and buying and accumulate. So this is a consolidation, but accumulation within consolidation, and it looks the same for soybeans, and it looks a little bit different for wheat. But the thing is you could draw a line here and draw a line there, and you have a consolidation pattern. And again, it's the same setup. It's consolidation in general. Cause building is what I call it, and we can see that there's energy build inside a cause building. Now, where do we lie, and what is cause building going to be bound by? It's going to be bound by reversals. Inside the reversal tabs, you can pull down the markets. You can find these markets in order to save some time and not have this review go on forever. So we can all go out and do something out on this nice Saturday here, and Saturday evening for most of us. Let's take a look at some of the weekly reversals inside this reversal tab. Now, I focus on the weekly because it's the most stable. They have the least amount of noise. The daily has a ton of noise in it. Monthly reversals are not, they're very powerful, except there's just not a lot of them. Weekly is the time frame to focus on. We zoom in and take a look here, we can see, and I'm not gonna, I mean, this is not inside the futures contract. This is for the corn ETN and the soybeans ETN and the wheat ETN. But it does give you a rough idea where the volume, where the resistance and support lies. And you can translate that into the futures contracts or just any marker that you use to trade these vehicles. The reason why corn struggled is because there's a tight band of overhead reversals here. And we're going to have to overcome them at some point. And there's one resistance or support zone here, and then there's another one down here. So if we hold this one here, we're going to have to chew through this. We've been chewing through it for a while, and we keep getting stopped. At some point, the price will jump the creek, and it has to get through this zone. You could say the same thing. This is soybeans. There's a huge amount of bands inside there. There's a lot down below, but there's a lot of them inside of here. It needs to overcome this and jump the creek if it wants, or break the ice. And break the ice, corn's probably going to have to take out these levels down here. And wheat looks very similar. It's got a heavy band of red lines above. That's overhead resistance zones. And less of the support below, but they're green. So to jump the creek for wheat, we got to get through this zone here. You can see where it ties in through here, ties to this congestion zone. It stopped it once before. We almost broke through, and yet it struggles a bit. If we can get through this zone, we're going to hit an air pocket, and we're going to run to this zone. Price is going to move pretty quick from here to here, and that's an observation we see in all sorts of markets. It's not just the grain markets. We just seen that, a good example of that in natural gas lately, where natural gas plowed through, and I can show it. Maybe I can show it quickly. I don't know if I have access to it. Um, the natural gas flew through and ran up, and it ran through the reversals. Why do I focus on this stuff? Here's natural gas. Natural gas jumped the creek here through this set of reversals, and then it ran up into this area of here, which it's still even higher. We've paused a little bit, but there's another zone. Natural gas is inside an air pocket. Not totally important for this discussion, but that's why we study the reversals. You can take a look at them. Anyone who's a subscriber, you can go into this tab, pull in the corn, a soybean, or the SOYB and wheat, and you can find out where those are, and you'll get a rough idea of where if you're not a trader, you just find out where are the zones that we need to clear for this thing to really to snap the reins and have the horse take off. I mean, it's either that, or you're gonna, if anyone's been in the Midwest or the northern parts in Canada, or where you're walking through a frozen lake, you got to watch out, because if you break the ice, you're going to drop real fast. And that's why those terms are quite interesting in terms of describing jump the creek and break the ice. That's what we talk about when we're going to get out of cause building or consolidation. So really, the corn market is within cause building, consolidation right now, because the composite trend is out of alignment. This has more room to run here. These are not at 20 and 15 days across the board. These are not extended cycles. We still need to deal with the weekly. The energy build still showing accumulation. The one thing I'm going to talk about before I end this, and I don't want to talk forever, is the high compression here, the downward com. And that means that corn is showing increased, and this has to do with some of the reviews I've done recently. It's showing very low volatility. This often happens during cause building, so the 3 time frames are compressing in terms of volatility. This hints that a move is coming, and now it's going to show up here, and it's going to show up here eventually. These are all precursors that a decision is getting closer and closer. Volatility is also a cycle. Price is a cycle, time is a cycle, energy is a cycle, but volatility is a cycle too. Volatility moves in between, hang on a second. Volatility moves between compression and expansion, and it's right now compression means it's compressed like a tube of toothpaste through a very small point through 3 time frames. And when price slaps through or smashes through that, or you slam on the end of a tube of toothpaste, price accelerates through that and usually breaks out in a direction. It's either up or down, and in this case, it tends to follow where the primary trend is up or down, and where the energy builds lie. So we're looking for calm signals. Down arrows come across the board. They probably won't come all at the same time, but it tells us the corn is getting ready to make a decision, because the next thing that's going to come is expansion. So where's expansion going to come in the direction of? Upside expansion or downside expansion? Well, the odds favor right now it's going to be upside. So these are important indicators itself to follow. So if you have any questions about what we talked about here in the grain market and the setups and the energy, let me know. Contact me back at the blog. Thanks for watching this rather long video, but the setup in the grain market is they do get complicated, and it's important to isolate them. What we talked about here can apply to every market that's inside the matrix, whether they're the coffee or cocoa, which I'm going to do a review on cocoa later, and I suggest you guys watch. The setups are always the same. This conversation is exactly the same. The numbers are exactly the same. They follow different cycles, but the logic is the same. Once you get good at trading grains, you'll be good at trading precious metals, energy, the bond market, and the equity markets. The only exception is not every market produces energy, and there are exceptions to that. So we can talk about that at another time. So enjoy the rest of your weekend and Saturday, and I hope this clarifies the cause building that we're seeing in the gray market right now. Thanks for watching. We'll talk to you guys later.